Good morning, Marius. Good morning. Just coming up to 9. Can I confirm that you can't hear my air conditioning because we are going through a major heat wave in Perth? Well, good morning, everybody. It's 8 a.m. New York time. It's Wednesday, the 22nd of November. And yeah, I wish you all a good start to your trading week. I hope you've had a good start to your trading week. We're in the middle of our first summer heat wave in Perth, so it is very hot. It's going to hit 40 degrees tomorrow, which I'm guessing is somewhere over 100 um, in Fahrenheit terms, and I'm hoping that nobody can hear the air conditioning fan that is on at the moment. Let's get the disclaimer over and done with. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, let us get rid of that. Okay, right. I was having a chat with a couple of people at Bookmap on just how to best differentiate these two webinars. I'm talking about the Wednesday webinar, which is this one, and the Friday webinar. The Wednesday one, I'm going to be a little bit more slow, and I'm going to focus, or at least I'm going to try and focus more on technique, on how I build Bookmap and the other things that I use into a trading system and setups and execution of those setups. So that's what I'll be doing. So if I'm going slowly and I keep repeating myself, that is why. It's because this is more of an educational session than the Friday one, which will be more of the live commentary, especially if we have those major releases. Talking of which, let us flick over to the slides, and I'm just going to speak to those. I'm just going to refresh something on another screen that I'm hoping to show you in a minute. But anyway, meanwhile, here is the economic calendar for today. And what we have in 25 minutes is the major news item of the morning, being building permits and initial. Oh no, sorry, it's showing the wrong one. Let me get rid of that one. I don't know why it's doing that. Let me just drag it in. Let's just drag it in. Let's go back to. I apologize for that. It's just the wrong slide that's still there from Friday. Okay, let's have a look at the calendar. This is the live trading view calendar, so we can see it's durable goods, continuing jobless claims, all at 8:30. Then if we scroll along to 10 o'clock, Michigan 5-year inflation expectations, and you've also got the crude oil inventories at 10:30, which can often add a little bit of volatility to everything, including the indices that we look at. So really, we've got the initial jobless and the durable goods coming up at 8:30. Okay, excuse me. Right, let's go back to the slideshow and ignore that slide, which is just wrong. So this one is wrong. Ignore it. Let's move on. Okay, back to the dailies. Okay, I'm going to take this one. This is going to be the start of moving slowly through this. Okay, why do we look at the dailies? Okay, everything that I'm going to talk about today is going to be really an auctioning process. So whether I'm talking about it as a Wyckoff trader, a volume profile trader, a Bookmap trader, whatever else it is that I'm looking at the markets auctioning, because that's basically what they do. They either find balance or value, or they go around exploring up or down looking for value. And as we can see here, since this low in early November or early to mid-November, we have been effectively exploring upwards or auctioning upwards back towards this high in NQ, which is getting quite obvious up here. And if we move across to ES, Sorry, I don't know why that's. Do not know. Again, we have a problem. Let me just ditch that one for a second again, and we'll go straight to the charts and just blow this one up. Okay, you can see me actually do this, which is what I do every day. Okay, so effectively both NQ, which is above, and ES, which is below, are going towards two peaks that were there before the big move down. So NQ has already hit the penultimate peak, and it's just the main peak to take out, and ES is about to take out this penultimate peak, and then it has some way to go. So NQ is clearly stronger. Right, so again, I apologize for that. Let us go back to the slides. Let's hope that the next slide is right. Yes, good. That's a little bit more like it. Okay, I've changed this one up a little bit by simply making it wider. Why have I done that? Because I'm trying to add more context to looking at a medium-term chart, which is here a 10-minute chart, and the shaded grey is the ETH, and that's essentially from here through to here. That's what we're showing as today, and what we've done is also include yesterday's ETH just to give an idea or the context for what can happen in ETH. And this in terms of the statistics, and we'll get to those in a couple of minutes, this is kind of average range for what can be achieved. So that's just why I have widened that chart. And for NQ, again, you can see actually this trend channel that we're just been driving up since 3 a.m., which is the London Open, and you can see what happened yesterday. So it's basically a mirror image of yesterday, where we had that big drop down. Now we have this big drop up. It is just pure manipulation. I mean, we can talk about this as also auction theory, which it is. It auctioned down to find some fuel to go back up again. So that's essentially what it did yesterday and in RTH, and now it's auctioning back up. And when we have a look at the TPOs and the volume profiles, that will become more apparent. Right. Okay. One more slide, and then we ditch the slides. No, we've got two more slides. Okay. This one, even though this is not a volume profile chart, one thing I did say time and again at the beginning of these webinars a couple of months ago was that you need a proxy for where value is, especially in ETH. Sometimes the profiles don't really establish themselves in terms of volume until you're well into the European session. So you need a proxy for what that value is. And one of the things that I use, and again, this is just high level stuff, it's not detailed enough that you take trades. I mean, it may provide locations or rough zones where you might be looking for trades, but this is just really where is value. So the dark shaded areas in both NQ, which is above, and ES, which is below, are one standard deviation from VWAP, the Globex VWAP, the ETH VWAP, which is the dark grey or black line. So you can see the shaded area on each. And the idea there is or one of the ideas, and it applied clearly today, is that where we break out of value, there is a danger or a risk that we are getting into trend exploration or auctioning in one direction, and any fades against that may be inherently dangerous unless you have a fairly tight stop in place so that you don't break your bank account in any way. And here we can see that both ES and NQ around about the same time broke out of this dark shaded area and have not looked back since. That is really a proxy both for trend and breaking out of value and establishing new value or looking for new value. So that is why I use that chart primarily, and this is a very good example today. Okay, so we're not talking about fading the top of any standard deviation. We're not talking about taking a tag of VWAP, which occasionally can be a good trade, like it was a good trade on ES today. That's not really why I use it. I mean, if there is a tag of VWAP, sure, I'll have a look at it as a potential zone, but that's not the purpose of that chart. Okay, and the very, very final slide today is the pre-market. This was about 20 minutes ago, just to show what has been driving or what has been benefiting from this exploration upwards. And you can see that Microsoft is already 1% up, and Nvidia is nearly 1% up, and Tesla is on its way to 1% up. So you can see all the big boys, maybe not Apple, but everybody else is there. Okay, now we definitely have done the slideshow, so let us go back. Aha, right. We've got Bookmap here. One thing that I do look at in terms of auctioning, and there's something that I wanted to show. Again, I don't get paid for when I show you anything, or when I have a trading view chart, or when we listen to Financial Juice. So again, this is just something that I am currently paying for and looking at as ideas for where auction exploration may go. So the reason why I've got this up in an 8 a.m. breakfast webinar is that this options profile, which is today's really, this is today's options profile or gamma profile, is to look at where they're starting to develop gamma, which can act as attractive magnets, depending on where they are. So ordinarily, again, I'm not 100% sure that it did update at 8 a.m. today. I have refreshed it a couple of minutes ago. But this can show in the 1.5 hours prior to the RTH open where some of those gamma levels are exploring up. I mean, the website's there, but feel free to explore it yourself. And I do have their permission to show that to you. So I'm just aware that the update time there, clear cache, has not ticked over to 8:11 a.m. So it may not have updated for whatever server problems they have today. But ordinarily, every morning at 8 o'clock, those gamma profiles do start populating. So it's just one of those areas that I'm looking forward to see. Is there some kind of avenue that they're wishing to auction or explore into before RTH? And that's the only reason I have shown it. I might get rid of it now, so it's gone. Okay, right, let us go to the next part of value. Okay, so let us drag in and let's make this a little bit bigger today as well. Let's drag in the ES TPO and volume profile. And what I've done here is I've split it out. So these are split out by 30-minute intervals. So effectively this is a 30-minute chart. And you can see what has happened if we look at these bars here during the course of ETH, which is the shaded area. This is all ETH. It's just because I have split it out, so if I reset it, they would all be nicely together, and if I split it out, it goes like that. But it helps with a higher level time frame to see what the exploration is. And if we crush the scale a little bit, so i.e. we zoom out, we can then look back at the value distribution. And I don't think I've got my pen. I will get that in a second, and I'll draw on this in a second. And NQ is actually a better representation of that. I'm waiting for my pen to appear, which is taking a little while. Anyway, you can see where my mouse is. Aha, now it's appeared when I've clicked it the second time. Don't you love apps that take a little bit of time to do their business? Okay, so what I'm trying to say is that you have this value, which is from Monday's RTH, and I can essentially draw that as one value, or I could just draw it as a curve like that. And we had yesterday, if we get all the profiles in, we had a pullback down, so they were exploring to see where they could get support from. And since the London Open, they have been doing their darndest to explore to get back into this value. Let me just get rid of the evening profile so we can see that again. So you can see that there, and if I show the NQ one, it's even clearer. I'm not using screenshots, I'm actually using the chart because I just think it's a bit better to show you what I am doing and how I'm using it rather than a screenshot, which is a static image. This is a live image, so you can see me zoom in and out. Here, again, if we crush the scale a little bit, and we get our pen out, the value, even though NQ is a thinner instrument, it is clear. You've got this LVN or ledge down here, which was resistance. They pushed all the way down there looking for support. There's yesterday's low, and since 3 a.m. today, the London Open, we've just been driving up, and we're almost, or we are right bang in that upper distribution. So this ledge or LVN low volume node now acts as support as we potentially or probably explore this whole value zone. Now that we're in there, it's likely that we'll go to the other side, or at least some of those high volume spikes that are in that distribution. So that is why we're using that, to clearly see the distributions that they're willing to explore or they're likely to explore, and then to get back into. So this is the probably the clearest and highest level of auctioning that I look at, and hopefully it's relatively clear to people in terms of what it is that I'm looking at on this chart. So really, I'm looking at all these distributions and seeing where they are in relation to each other, and where it gets thin and they get rejected. Okay. In terms of what levels or zones I'm actually drawing on them, so I am marking in the week's high, which you can see there. I'm marking in clear delineations between distributions, so I call this one a ledge or an LVN. Marking yesterday's day high or Globex high. I'm marking where most volume or value was traded, and I'm marking where yesterday's low was. And I think if I scroll down, maybe, yeah, there, and also occasionally these naked points of control, which are value zones that they may wish to retest, or there is a probability or statistic that they like to retest them after they have moved away. And there was something that I was talking about 2 weeks ago, where they leave a lot of these naked points of control, i.e. value zones that they have not touched again, and they begin to add up. And I think once we'd reached the bottom of this downtrend, there were 8 above. And I think now there's probably only 1 or 2 above, or if that. Yeah, so once that number of these naked points of control gets above a certain number, the probability or statistic that they are going to get tagged, or most of them are going to get tagged, gets very, very high. Again, I can't predict the future, and I always welcome everybody to determine your own statistics and do your own research on where those probabilities and statistics actually lie, and whether I am telling you anything that I'm telling you is actually truthful or not. But since I'm not actually getting anything out of lying to you, it's likely that I am telling you the truth. Right, okay, so effectively on this one, we have auction down, rejected, and we're now auctioning back into this value or distribution zone. So the likelihood is that in RTH we will get into it in a further way, and we may even take it out. But let us see what happens, because again, we cannot predict the future. Right, okay. Let us move on to the Bookmap. I might drag this out of the way as well, so it's not in the way. Just going to try and drag it so it's not affecting anything. Okay, right. Because I am focusing on technique and auctioning, I have tried to make the Bookmap charts even clearer for this purpose today, and maybe I should just keep them this way once I've gone into minute details on the auctioning. So effectively, we've got 2 NQ charts. We've got the completely unfiltered one with a stops and icebergs indicator and no other indicator. I will put the market pulse volume pressure imbalance back on when I have it working again. I just got an old version of it which needs to be updated, and I'm speaking to support to get that updated. But those are the only 2 things that I will be using: the stops and icebergs, whether on the chart or in the sub panel, plus the volume pressure imbalance. Okay, and secondly, I've got the filtered a filtered clone of the NQ heat map, which is only filtered to show orders that have not moved in any way, whether it's by increase or decrease in size or increase or decrease in price. So these are basically static orders, and as soon as they are no longer static, they disappear from the heat map. So that is the only difference between this heat map and the other heat map. And the main reason is to get rid of all these horrible algo bands and see clearly where the bigger players are advertising that they would like to transact business. Okay, we've got good morning, Trader HE. Okay, we've got a pretty dimmed out heat map because I'm trying to again show levels that are more significant than other levels rather than every single bit of the book. I've got the order book, and again I've just got the numbers and nothing else. I've got two columns. One, EX is my execution chart, where basically wherever I draw a zone, it appears within 60 seconds in this column, and my volume profile, which is the TPO that I just showed you. Anytime I draw anything there like that ledge or LVN, it appears in this second column. The delta is a delta profile, which is the ask volume minus the bid volume. This is the one that I consider the most crucial, and that is the reason that I've removed the volume dots or delta dots, because I want to focus people's attention during this webinar and the next few webinars on what is happening in these two columns. And the second column is the actual volume profile of the chart range. I've removed the numbers and put them in a separate column. So in other words, these two columns are identical. This one shows bars, this one shows numbers. And the reason that I do that, and I think NQ is going to be a good example of that, is that if we drag this along and we try and look at a miniature auction, so we look at this little auction up. Right, so we auction from here. I can draw again. From this swing point here, and then we auctioned all the way up, right? And what we have here on this delta column is what I call a delta tail. Again, I haven't got my tablet. It's on my shelf, so I must dig it out for the next webinar. That's dreadful handwriting with a mouse, but bear with me. Okay, if I had the volume dots or the delta dots, it would be really hard to see how price had acted on this swing up. And what I mean by that is, in particular, I'm looking at these slips in price, which are often in NQ especially, just as much in ES, but NQ perhaps more so, liquidity dips, in both directions, both up and down. If I had this completely covered with green or red dots, you wouldn't necessarily see that. And I said this the other day, one of the beauties in Bookmap is that you can zoom in on the millisecond, the microsecond, and you can see that, right? And this was on a swing up. And what you'll often find is that the liquidity dips, by their very nature, get reclaimed or filled or reversed relatively quickly. It may not happen immediately, but the probability is there that whenever they have a vertical drop or vertical climb, that it will retrace all of that distance. Yeah, in auction, in micro auction theory, that's like a micro auction down, rejecting a point and then auctioning back up again. Right. Okay, so that is why I'm not showing any of those volume dots, and I think I've alluded to this many times that I don't really use the volume dots, delta dots. I've changed the settings so many times in these webinars because I don't use them. I am using, when I'm assessing my swings, and one of the most important things that I can do is determine when I believe, for whatever reason I believe, that an immediate auction, this is an immediate auction, when I believe an immediate auction has finished, so that I can place my stop. Because without placing one stop and accepting one stop, it is impossible to have equal dollar value risk on each and every trade, regardless of whether that is a scalp or a multi-hour swing. You've got to know where you are wrong, or you do not know what bet size you are actually trading. Okay, so So why have I got these three columns? So this column really is just showing when they may be running out of fuel, or the buyers here, and we'll ignore the fact that it's been auctioning up on the higher time frame basis all day. But on this immediate auction, which is the shortest term auction, they may have run out of fuel temporarily to keep going up, and then these late participants shown by this green section here of this tail plus this big fat green bit act as fuel to then take us down. Okay, so that's why that delta column is there. The volume profile is there so that we can zoom in. One of the reasons why it's there is so that we can zoom in on. Let me just try and get to the top of that again. Just trying to get to the top of that auction. I think that is the top of that auction, or that's top of an auction, and then we can zoom in to see what kind of profile there is on the end of this particular immediate auction. If we go back and I may stop in a couple of minutes so we can listen to the news at 8:30, we can see that a lot of the times that on this trend up exploration that this auction was unfinished, not in the sense that sometimes I describe it of having a buyer and a seller both participating at the extreme level, but that the actual profile, the amount of business being conducted towards the extreme, whether that's the last price level or the last 2, 3, or 4 price levels, it was relatively clear that they wished to continue after some form of pause or pullback. So after the 8:30 news, we we can go through both ES and NQ and look at these little micro auctions and see how these columns worked out and whether they provided any value in terms of whether you were fading this up move or fading a down move, because you're going to have to fade something in your trading lives, unless of course you're a breakout trader, in which case I wish you the best of luck, but it's not something that I do very often. Right, okay, time check, 8:26, so you have 3 minutes to go. I will turn on, just going to move a couple of things around so I can turn on the financial juice feed so we can hear it. Breaking news, OPEC meeting scheduled for the weekend has been delayed. Okay, I don't think that really affects us too much, but unlikely to affect us, although oil has been moving down considerably today. Oil has been trending down for the last 2 hours or so. Okay, you may well hear the financial juice feed as and when we have that 8:30 news in a couple of minutes. Meanwhile, let's have a quick look at what is going on the map. So this is our little break into live analysis, which I've probably done too much of in these webinars recently, but again, there's no harm. I'm sure a lot of people like to have a look at the current live heat map and see what's there. So we see a tiny little buy iceberg of only executed 4 contracts. I don't use those as targets. I like these ones above, regardless of the size, but the bigger size that has been executed, and then price moving away, the more interested I am as using that as a target. So let us zoom out on the vertical side, so that they have placed some liquidity up here prior to the news, 444 contracts. And in terms of resting liquidity, it looks like we've gone through most of it already. So you can see all this resting liquidity that was there up at this level, 4, 5. Oh, yep. Sorry. My apologies. You may not be able to see. So let's just get that font back up and running before the 8:30 news. But you can see that this resting liquidity and that resting liquidity, in fact, all these resting liquidities have been smashed through on this exploration up. So yeah, they have placed one up here at 4,590, 4,580 rather, and a new one here at 4,588. Again, they're just advertisements. What we're more interested in, or what we're most interested in, is the auction that is happening right now, and obviously the higher level auctions that you might be watching in your other software platforms. Although some people actually watch it in Bookmap, I watch most of mine in Sierra. Okay, time check again, 8:28. again, we cannot predict what this news is. So if it is completely against whatever the market is expecting, there could always be a rug pull down. You know, a rug pull is sort of where they pull the support and we go all the way down to this liquidity underneath yesterday's daily high, which you can see in that column there. So we cannot predict the future. All we can say is that from the auction, it looks like they're getting into the highest distribution of the recent trend up, and they may explore the full scope of that distribution at some point in the next couple of days or so, or maybe even today. Okay, we've got 20 seconds. I am not hearing anything on financial juice, but I will let you know what that value is. So they're expecting 227,000. What we want to see is if it's materially different. Okay, we've had quite a volatile reaction. I will have to zoom that one out. Okay, I hope people heard that, but basically what they said was that both durable goods and jobless claims came out lower than the market expected. So we had a little drop down. I've got the recentering currently on last price, so that's why I had to zoom out. Otherwise, it would have wobbled up and down a lot. So now let's just watch. So we've got the scene of the crime. Let's try and mark it in both ES and NQ. Firstly, ES, essentially around about there. NQ, around about there. So we have not crossed the scene of the crime yet, and it is a scene of the crime because there was a decent move away at the news release. So unless there is some form of move away that is, sizable, there's not much point describing anything as a scene of the crime because there was no crime. So the low is there, and we can see that at that low there were two contracts traded. So we take that out and we zoom back into this and we watch the exploration here on this column to see how that market is exploring into this liquidity. So we're watching the numbers at the extreme. I'm making sure that I'm zooming in so you can see those numbers. So what you want to see is a rejection and then note the value here. If it's 1, 2, 3, something really, really low, that might be a swing point that can hold for a little while because it is the end of that exploration and they have not found any further balance. It is just that is auction scalping, as I might call it. Yeah, but that's why I've got those three columns there. But you've also got this liquidity, this advertised liquidity. As I've said before, advertised liquidity is a double-headed beast. Its best use is probably as resistance or support, as it was here, but it can also be used in the right circumstances as a magnet. Okay, it's like maybe this is magnetic and it's getting it back over there, back towards the scene of the crime, which is just above it. But there is a danger where you're using it as a magnet and you're trading towards it, and it was just a decoy, and they had never had any intention of going back there. For example, like here where it acted as support, and then you decide in your head that it is a magnet, so that the price will come down. What I found is that can often be one of the worst ways of looking at it. Although on this scenario, it looks like it may come back down. So we're almost back at the scene of the crime in ES. So let's have a look on ES as well on how that little auction unfolded. So at the time, this is something that I was mentioning previously, these rollovers, these single-digit exploration extremes. So there was only 9 contracts at the extreme. So that is quite commonly a swing point as well. You know, common swing points are a really low number there or a really high number there. The high number is likely to get taken out later, but the low number can normally act as a good swing point. Doesn't mean it's going to work each time, doesn't mean it's going to work 80% of the time or even 70% of the time. It's all about context, but it can be quite useful. Again here, let's just have a look. If we just zoom right into this little exploration in NQ, so we've got to zoom in so we can see all the numbers correctly. So you can see like 4 at the little swing high, then at the swing low you had 5, and then a vertical climb, as we said. Those are often taken out relatively quickly. This one was claimed back a little bit, but not all the way. But those are quite interesting. So you've got a vertical high. I mean, on my very short time frame charts, I often mark those if they correlate with something else. You know, they can often be very good targets, you know, whether it's your 1R, 2R, 3R, 4 or 5R, whatever it is in your trade, but they can be a good part of your system. Okay, I haven't actually mentioned that, as I always do, that I'm open to questions, comments. If you want me to talk about anything in particular, feel free to fire a question into the Discord channel or onto the YouTube live chat. So again, we had this there. Let me, I have to do this with my pen. And you can see how that's being reclaimed, or virtually all of it's been reclaimed now. And then it recentered, so it ruined my picture. Never mind. But you can see if I just go across that it did reclaim all of this before it recenters on me again. I find this form of recentering, and we can go through it. Let me just have a... If you right click on your price art and you can see this recenter, I've chosen the last price, which is quite useful when you have zoomed out and you are not watching Bookmap like an absolute hawk. You know, if you're in scalping mode, recenter last price may not be the best one. The best one I find in scalping mode is recenter none, and then there's none of that recentering, and you can just double click on this. Let me just... You can just double click on that, and then it brings you back up to wherever you are. So yeah, if you haven't explored all the various recentering, it's all in the knowledge base on the Bookmap website, but yeah, feel free to check out those, and your use case may differ depending on what you're actually doing at the moment in Bookmap. But I think I've used them all for different purposes. Again, I think I've got the same recenter. I'm just going to go recenter none on. So we have not taken out that scene of the crime. So there's 8:30 there. We went right back to the scene of the crime, rejected it, and came back in. I think statistically on these webinars where we've had a major news release with a price movement away, whether it's up or down, the first touch has acted as a rejection point, but that hasn't ordinarily panned out beyond that first touch. In other words, if it comes back, I would not be surprised to see it cross that scene of the crime. We might just leave ES ticking away and we can zoom in a bit. So we're watching the liquidity, but I did want to go through some more of these examples, especially on these trending ups in NQ, because NQ in ETH It's probably the cleanest of the two instruments to trade during the European morning session. And I might at this point dig out the stats for today as well, so we can have a look at that. Let me just dig them out. Okay, so you can see for the European session on this trending up, we exceeded the 10-day average in NQ, so there was plenty of opportunities provided you're going long. There were a few shorts in there as well, but mainly longs, and the ETH average of 115 has also been exceeded for NQ, and we're pretty much bang on the money for ES. So just showing you that too. Okay, what I wanted to do was to get back into some of the crazy uptrend and look at the micro auctions. Crazy in the sense that it was pretty much straight up, and I'm talking about I'm just looking at my 10-minute, really from 4 a.m. onwards. So if we drag this back, and we might have to zoom out to get back to what I want to show you, or what I want to look at, and I haven't pre-prepared this. We're going to do this live on this review, live and review. It's a bit of an oxymoron. But let's go back to this move up from 4 a.m. and what we're looking at is these micro swings and what is left on these extremes. Okay, so this is the first one. Let's just look at this. That's actually relatively small. I'm just checking that there's nothing else in there. It's not in the 1, 2, or 3, or even 4 category. And you can look at what is auctioning towards the end of that extreme on this. And let's look at the one before as well, because that's probably a better example if it's what I think it is. Yeah, that's a better example. So here, after this 4 a.m. kickoff for this move up, maybe it was one of the big German banks that kicked off this move. Who knows, because we'll never know. But if you look at what is on the extreme at the swing point here, it's 47, right? And what I would suggest to anybody that has the time to do this, maybe in replay tomorrow, or whenever you have a chance, maybe do it live in a European session or in the RTH session, is have a look at what is. Sorry, I had to zoom right in. It's still pretty high. What is right at the 2, 3, 4 top levels of the NQ when it is squeezing shorts, and you'll find most often you will have fairly large numbers, and when you get numbers like this, that is strongly suggestive that they haven't finished with this squeeze up or exploration up, and that the next opportunity, if you can find one, is a long on a pullback. That is one thing that you can use this for if that's what you're interested in doing in ETH. On this occasion, it went a long way north from there. And I wonder if we can get a contrast as well on the down ones. So here we have a downswing. We have to zoom right into it so we can get rid of the previous volume. Okay, you've got a spring here. So this is the type C supply and demand setup that I've been talking about previously. You haven't got that nice liquidity wall acting as support, but that doesn't matter here. For this purpose, we're just looking at what is at the very bottom of this, and we can even drag this a bit further out, so you've got this particular swing. So we're zooming right into this swing. We're having a look at this, because we're just looking at micro explorations, because the market is fractal. So if we're looking at this on a micro basis, you can look at it on a much higher level basis as well, and the same thing applies at a different scale. I notice that in ES we're getting close to that scene of the crime, so this is what I was saying, that once we retouch that at 4, 5, 6, 4, 25, 50, we may go past it. But yeah, I mean, I just encourage people, to have a look at those micro auctions and see how that plays out in line with how they think larger auctions tend to work. Okay, just doing another time check, 8:44. So we've got another quarter of an hour. And again, so what I have to do regularly is zoom in and out just to have a look. So I've said that my probability is that, let me drag it back. My probability is that provided this is not getting too thin at the top and we get back into it, then we could end up either today or another day exploring all of that and maybe moving further up. And we haven't talked about the macro context in which this auction is actually happening. So if you look around at all the economics news since that CPI release, which happened when we were live last Wednesday, I think it was, since then there's been various global inflation outlooks, not just the US one, and they've trended down. And also you've got the US dollar, DXY is an example of it, that has come down. So that was up at the 106 level. It's now, I don't know, I think it's the 103.6 level. So it's under 104 from memory. It may be slightly higher. But that is the macro context, that people think that inflation is coming down, so that the era of interest rate hikes is at least temporarily over. So it's all good times. So we're in an upswing in the markets. So that is that context. Just get rid of that again. Sometimes it's hard to grab. Okay. And let us get rid of that drawing there. So we're just looking across as well at the boundaries of this liquidity in NQ. So we're finally in a balance zone here. So you can see that. So that's on one of the rare occasions today, and this has actually happened after the major news release, that we've had a balance zone in NQ where, in the old theory of trading ranges, we're looking to short from the highs and long from the lows of this range. Now, if we were to draw it, see there, maybe I've drawn it a little bit too high. It's slightly lower. It's more, the height of it is actually more around about there. And so when you're in there, if you do see some of those vertical slips, they can become enticing to you, provided you're willing to take a fairly tight stop and you're getting in at one of the extremes of the range. I mean, if we just drag this one back, and you've got this vertical slip there, and it's also a spring into this liquidity here, which is that favorite trade of mine, which is a spring into a thick liquidity wall. And the fact that it's a nice vertical push down adds to the probability. And then if you take that there with a tight stop, maybe just under there, you're pretty much into that 3R territory up there. And if you'd held it, because the bigger context is long, we're up now at the higher liquidity of this boundary of this rectangle range. And now over in ES, we've crossed on this second touch. Is it a second touch? No, it's probably one touch, two touch. Third touch, we've gone through this seed of the crime. May as well get rid of that line. Doesn't really help anymore. And they're advertising up there at 4568. Yeah, so to explain more why I don't tend to use these buy ice sitting under the market, especially with a volume of 4 so far, as targets, is because These seem to be more like wishful thinking, that they'd love to buy some more down here, but it's often the case that the game has gone and the game has now moved on much further away, and then they're not going to come back down in the near future. They may come back in an hour or two, but not in the shorter term. I also find statistically, when I'm looking at my results, when I'm trading towards sell icebergs which are resting but above, I have a much greater chance of success, and that's one of the reasons why I ditched trading towards these things. So NQ is just coming into, well, they rug pulled this liquidity here. I don't think there's any interaction. No, it didn't interact. And let's have a look at what is on the, again, it's quite a low value on this extreme. So it's just something to bear in mind. Is this combination of how are they auctioning, which is this column, who might be trapped, this column, and what size auction, which is the third column. It's just those three tend to go hand in hand. And ordinarily I'll have some interesting things in these two columns of levels that I'm watching, but since we went through that ledge and that's now support, we haven't come back down, ledge or LVN, whatever you want to call it. So that's now acting as clear support until we break through it. Okay, so I'm just going to zoom out again, have another look. So that was what they placed an hour and 2 hours before that news release at 6:30. But yeah, it's just an advertisement. It's just something to put in your notebook, something to be aware of. You know, if I'd got that gamma going earlier, I would have a look and see what major gamma levels there were in SPX that might equate or correlate with that resting liquidity. It's just one of those things, you know, do you have two things from completely independent sources that tie together, you know, because that adds to the probability that, you know, we might even get there today. So we're on a nice little move up now. So when we're on a nice little move up, the auction ends of ES are going to be different to auction extremes, rather, to NQ, but yeah, just have a look at them, just see how they turn. Yeah, it's one of the beauties of this platform, is that it's a great learning tool. And it's good for, you know, building your own strategies. They don't have to be the same strategies that other people have used. You know, you're the only one that knows how you execute your strategy and the statistical results on the back of it. And we're not just talking about, you know, did you manage to get 0.5 for an hour or 1 hour? We want trades that over a sequence of trades get you well into the green. And if you're picking up 0.5 hours or 1 hours all the time and not getting more than 1 hour, it's not really going to help you in the long term. So here, the problem is I have to zoom in on this vertically. Before that hit that 9 at the edge, you could see that it was auctioning quite well here. Still, you know, I think that there's probably enough there that we will continue to auction up after a pullback. Maybe we're just tagging the scene of the crime and then we're going to go up. And the fact that ES is still driving up or channeling up suggests that to me as well. But sometimes you have these nasty little dips. I mean, you've got this big vertical climb that they may retrace as well, so it might come all the way back down here before it continues up. But the thing is, if it does come back all the way down here, and it has now, and then, you know, you form a belief for whatever reason that it might get back up here, then that increases the number of R that you might potentially get out of a long. You know, if we get a setup, you know, one of the setups might be, you know, a test of this supply and demand zone here, if you can call that a supply and demand zone. And then, you know, provided, let's find out what the extreme of this is, 3 and 5. You know, you had a stop. You know, you're not talking about a one-tick stop, but just a tightish stop, and then you're looking for something to, you know, to get back to the top side. Now I wish I hadn't removed that scene of the crime on ES, because then I could actually see what it might pull back down to. So if I had left this alone, which was I think about 4564, yeah, by the way, I mean, if you're really into scalping, I haven't used this in Bookmap for a while now, but I have previously used it, which is the resetting. So if you really were interested in seeing what was auctioning right here and now on this extreme, remember I was suggesting that that it would eventually get back up there, but it may take a while to get up there. You can reset that so that you can see what is actually hitting that column in this micro auction. Thanks, Trader HE. So the scene of the crime was 4565. So we're right at it now. I mean, it's a level, but it's more of a zone. So whether it's 4565.25, 4564.75, there we go. There's the auction that we were. To the extent that we expect anything, we were expecting that to be taken out, and that's why I was talking about um, talking about a trade where you'd have a decent multiple R to take that out. But we're now getting to choppy mode. So yeah, it gets a bit dangerous because they're probably looking for liquidity dips, but they're just going up and down. I think what just happened in NQ is another good example of why you demonstrate, why you need to demonstrate patience and wait for the really good multiple R opportunities in NQ, because you probably couldn't have figured they were going to come all the way back down there and then continue on this auction upwards. But that is what NQ does. So it gives you those opportunities. So if you start chasing and say, oh, I'll take it here and just get that little bit there, you're missing out on the best opportunities that NQ will present to you. It's one of those things where you feel you've missed out, but you haven't. And it'll make you feel as if you've missed out almost constantly. It is the nature of the beast. Okay, another time check. I think we're down to about 3 minutes. And again, looking at the liquidity up above both in ES and NQ, so that is staying in place. It's quite a large number, 447. We've got a little wall here between 468 and 4568 and 4571, which ordinarily you expect them to struggle through the first time. I.e. that'll probably be some resistance and they'll have to pull back a bit, but we shall see. NQ has been on a bit of a tear today. And I'm just looking at where it is now. So NQ is actually at its high of the day. ES is at its high of the day. ES is right about yesterday's high, which is at 67. So if we zoom in vertically, I've got yesterday's Globex high at 67. I'm not sure why it didn't come on my mark from. I've got the yesterday's day high, but my yesterday's Globex high did not appear there, so that's remiss on my part. So you think when they're getting here, and because there's no liquidity wall for a little bit, that they can go stop hunting just above 4567, but we shall see. And then you look as well on what is on the auction extreme. So we've got 48, 565, 918. But you also have to bear in mind the time of day when you start looking at these auction extremes, and remember also that that being a micro scalper doesn't necessarily pay the bills either. Having the micro scalping skills is very, very useful, but it's how you play that to get your multiple R's. So we're not looking at this to get 1 tick or 2 ticks. That is not the game that I play. I don't make recommendations on how people should play the game. It's very akin to poker, but playing for a very, very small pot size considering the amount of risk that we are exposed to every day, and the fact you can get these wicked dips in NQ all the time. Playing for 1 or 2 ticks is not my cup of tea. So we've got a little liquidity resistance bump here in NQ. Again, I think it will probably get taken out, but it'll be interesting to see where they go down first to see whether that provides an opportunity to get into a long. And I am not trading during this webinar. My trading engine is not on for this hour. What I wanted to focus on was technique and how you'd use the basic bookmap tools. Talking about the bookmap tools, because we haven't got the normal unfiltered NQ visible at all times, we're not seeing these icebergs and stops. But we can have a quick look back and see if they would have been really, really useful or not. At the moment, my preference is the filtered map. I just find it cleaner. So I know I'm missing out on those MBO stops and icebergs on NQ, but I just find this easier to view the liquidity map in. Right, I think I have exceeded my time, so I'm hoping this focus on technique was interesting or helpful to some people. And let me know in any feedback that you have, and have a very good rest of the week. I'll see you all on Friday if you come along. So thank you very much.